Now, the next thing I want you to understand is your brain's like, okay, the prices are moving. That's cool. But what exactly are these prices? Why are they like, how exactly are we making profit? Where is it coming from? You need to understand in trading, the reason you are making money is because someone else somewhere lost money. It's a zero-sum game. This is the law. This is a known fact in trading. This is not like some heebie-jeebie nonsense. It's literally a zero-sum game, which means that the act of you profiting means that somewhere else, somewhere in the world, someone lost, and vice versa. If you lost, someone else profited. That's how the whole industry works. Now, if you want to ask yourself, like, how is that possible? It's because when you realize the fundamental base structure of trading, let's assume that there's not a single person in the world right now trading. And now some guy opens a market exchange where the prices are moving up and down based on the transactions of, say, Apple price, like the price of an actual Apple. Like, we're taking it way back to like 1750, the year 1700. And some guy says, okay, to keep prices stable, we can't keep trading apples. We need to have like a certain index where the apple is worth the same worldwide. So the farmer can't go to his neighbor and be like, this apple's $12 when it's clearly $8 listed on the exchange right here. So it was a mechanism to stop people from obviously frauding each other and keep prices stable. Now enter you, curious, stupid moron that wants to trade. Just like me, I was a curious, stupid moron that wanted to, quote, make $100 a day. Once you eliminate those biases, you'll become a pro trader and you'll measure everything in percentages. But moving on with the fact of how trading works, you entered the exchange and now you placed a bet that the price is going to move up on buy. Like, the price of the apple is going to go from $11 to $12 because, like, Henry sold his farm and now he has so many apples ready to sell that I know it's going to go up. So I placed a buy. And I profited on that buy. Like, from 756, it went up to 760. And I'm like, wow, nice profit. I made $5. Where did this $5 come from? Who's paying me this $5? I'm the only trader in the world. Who's paying this? The bank, the person that started this exchange, the original source. So the fact that you profited means that the bank went into a loss. And the whole reason that they regulated this entire industry is because they know they're going to make massive amounts of money very quickly due to the volume of idiots that lose fast. So now if you want to be on the opposite side of that spectrum, you need to develop an edge in the markets. What is the edge in the markets? These candlesticks. Because they eliminate bias, they eliminate news, they eliminate ideas, they eliminate opinions. These are strict bars with strict ranges moving up and down on the screen based on the current price that give you an exact range of the trend. That way you don't have to be guessing where the news is going to take the market, what's happening in the world, nothing like that. You only focus on what the market is telling you, which is these candlesticks. Here was confusion, because you can see there is like a bunch of confusion here, right? Trended down. Here's some more confusion. And now it might be forming up. We don't know yet.